Okay, so like I've mentioned before, Chapter 5 is bank reconciliation. This is one of the most important things that you have to do as an accountant, right? So the purpose of having a bank reconciliation or completing one is to verify that all your transactions have actually gone through. So here's one notion that we have. The reason why we always do a bank reconciliation is because at the end of every single month, the bank should issue you guys a bank statement. And with that being said, your bank statement's going to tell you a description of every details that you've done with your bank account, right? All the checks that have cleared, all the cash that you've deposited. Now, there's a few rules on our end too, because what we're matching, and when we do our bank reconciliation, is we're matching the bank statement to our books. So this is our way to make sure and to validate that our transactions match. Okay. Now, here's a few things that we know that maybe the bank doesn't know. We know that we've written all these checks. Okay. Now, if we write these checks and send them out, our assumption is that we're going to automatically take it out of our bank account, because so then we can do good accounting by saying we don't have the money that we actually have. But the only reason that a check would actually clear is if the other person that's receiving the check puts it into their bank. Now, of course, we talked about really briefly about how checks operate, right? You need to have a signature, you need to have a date on it. But here's the thing that you need to know too. Just because you have the date available for the person who's receiving the check to be available that date, it doesn't mean that they have to put it into their bank right away, because we have one notion here that a check is available up to 6 months of the date that you've allowed it to be. So that means that person, whoever is on the receiving end, can cash it in within those 6 months. So with that being said, therefore our bank account, right, our bank statement will show us which checks have cleared and which checks have not cleared, because the other opposing party did not put the check into the bank, so it never took out from our bank. So that's a few things that we need to take a look at. Other things that the bank has charged us would be any monthly service fees, any NSFs in case we wrote a faulty check, any bounce checks. Let's say if we entered in a bounce check and the bank's going to charge us because we put in a faulty check, and they're also going to charge the other person for writing a faulty check. So once again, that's going to be things that are going to automatically calculate right away on our checking account in the bank. But we don't know that because we're just going through every transaction. It's not something that we record. So in overall, that is the reason why we need to complete a bank statement at the end of every month, so we can make sure that whatever money that we start off with the beginning of the next period or the next month, it is reflecting as if it's even. Like all the checks have panned out, all the deposits have panned out, and etc. etc. Okay, now. A bank isn't the only thing that you can reconcile. You can reconcile pretty much any type of account as long as it has a register. So therefore, any assets, right? Any current assets, any other current assets, right? Your fixed assets, your credit cards, right? Your long-term liabilities, any short-term liabilities, and of course anything that's an equity account. So anything that has registers, right? You can have a balance and you can reconcile every single one. However, the more common ones that you will actually see because of the whole you get to receive a statement issue, therefore you have something to compare it to. So the most common ones that you would actually normally see would be a bank statement and a credit card statement. But that doesn't limit to what you can and cannot check up on or do a reconciliation for. But like I've mentioned before, today we're going to take a look at a bank reconciliation and a credit card reconciliation. So if we go ahead and take a look at page 144, here is a sample of a bank statement that QuickBooks has provided for us, so we could go ahead and complete the bank reconciliation. But usually, first and foremost, before you even start the bank reconciliation, is that you must make sure that all your checks and all of your deposits have been cleared. That you've already entered them in. So here, I'm going to go to my deposits to make sure that there are no extra deposits that I forgot to make. Okay, so there isn't any, right? I don't have any notifications on my bubble there, right? I showed there's no notification. If I go to my check register, right? Make sure it says checking, and then then you could see which checks that you've actually written out, right? Making sure that every single one have been written out. Okay, so then now this is also what we're going to be using because this is our checking ledger as well, right? Our balance right now is $2,899.30. That's how much we have in our books at the bank. Okay, and then we have to compare to our actual bank statement. So let's see what the bank statement says that we should have. It says that we should have a total of $5,424.92. So therefore, we have a huge discrepancy of $2,000. So let's go ahead and solve our bank reconciliation. Okay, let's go ahead and find why that we aren't starting at why our bank right now is at $2,899 versus $5,400. Okay, so let's go ahead and close out my bank account real quick. Okay, so there are two ways that we can actually do our reconciliation. Okay, pretty straightforward. On our home page under banking, you have reconcile right there. Same thing if you go up to your banking on the menu bar, it will appear. Okay, reconcile right there. Okay, there's only two ways that you can do it. No other way that you can do it because, again, this is a window that you have to go ahead and enter everything in. Now, there are a few things you can do as you enter your transactions in. So the first one is that if in case you want to do, you want to enter in that you've been charged for service fees or any reasons like NSF checks or bounce checks or anything like that, you can actually enter them in right away through using the write a checks window. But the bank reconciliation kind of does it for you in a sense where you don't have to manually do it. So let's go ahead and click on that reconcile button. Okay, and here is what the window appears. Okay, now on QuickBooks Pro, it can only remember the bank reconciliation from up to the previous year. So it can only hold up to 1 year's information for the bank reconciliation. Premier, Accountant, Enterprise Solution, they can hold your bank reconciliation up to as long as you'd like. So up to 5, 6, 7, 10 years, whatever it is. But only Pro can only do up to the last year. So in this case, it shows me that the last year I've done my bank reconciliation, right? my account balanced at $14,384.50. Okay. Now, of course, you want to make sure that you are in your checking account, right? If you scroll down, like I've mentioned before, right, you can do any asset, any liability, and any equity account. But in today, we're just dealing with just the bank reconciliation, and we're only comparing our checking account. Okay. So, of course, the date, right, is we're going to take a look at our statement date. So, when are we actually going to be completing this bank reconciliation? We're doing it as of January 31st of 2019. So, that's what we have here, January 31st of 2019. Now, every time you do a bank reconciliation, right, it will associate it for every single month because that's how bank statements work. They give you one every month at the end of the month, okay? And so usually every time you complete a bank reconciliation, this date will be automatic, okay? So once again, in our bank account, we started off with $14,384. And the very rule of thumb here is that you want to ensure that the bank statement reflects the same exact beginning balance. So here I go to my beginning balance on my bank statement, and it is $14,384.50. So therefore, when we did our previous reconciliation, it matched before we started the next period. So that's very, very key that you know, because if you had a discrepancy, therefore you need to carry that piece of discrepancy over to the next period. So in this case, if I had a missing check, you would have to bring that in and carry it over to the next reconciliation. But for most cases, before you even enter in your reconciliation, they should be matching and there should be no discrepancy. Okay, that's for the best way of accounting is don't validate a reconciliation if you don't get to zero or you do not match on both your bank and your books. Okay. So that is that right there that we have to check for number one. Okay. Now, the second thing that we got to do here is we have to validate what the ending balance in the bank statement has, okay? Because in our books, right, like we saw before, our books show that we have $3,899. So we already know what our books is, right? We want to know how is it that the bank side shows only $5,492. Okay. So again, we got to type in here $4,024.92. Okay. So you're going to type it here in the ending balance, right? It's going to be 5,424.92, right? That's what I need to match my checking ledger to match this bank right here. Okay. That is our starting point. All right. So then the next thing is that, so a few things that we don't know, right, that the bank has charged us is anything such as any service fees that we've been charged or any, charges such as like NSF fees, or bounce checks, right? If we have any occurrences of any fees, right, it will report it on your bank statement. But as a ledger, as us the accountant, we don't keep track of that. All we care about is do we have enough money to write out a check? And if not, then we need to deposit more money. We are not checking up how much is our monthly payments or what are the fees that are entailing every time we write a check. Okay? So you would find that on your bank statement, of course, right? Here you have service charges. So you only have one, right? And it was for $10. Okay. So that's where we're going to go to our QuickBooks, and we're going to validate that we do have a bank service charge for $10. Okay. And it charged me as of the 31st, right? The account that we are going to associate this is going to be bank service charges. Pretty straightforward. It's an expense account because, once again, the bank has charged us money, so therefore we have to expense it. Okay. And then for the class, now there's another class that we haven't introduced to you before. So we have a San Jose location, right? That's one of our store locations. And then we have Walnut Creek as the other one. So if the bank, right, it's not specified for the San Jose location or the Walnut Creek location. It's more for so that this is for the both stores, and it's also the overall, I guess, organization, right? The overall business, right? So if you want to apply it to the overall business, we have what's called overhead. Overhead is anything that has to do with the business, right, as a whole. Okay, and we're gonna say that this was because of the banking, right? This is gonna be for both of them instead of none of them, right? It's both of them. So therefore, overhead is going to be the class here. Okay. And of course, when we talk about collecting interest, right, there's many things that you can do. So if you charge or if you allow your customers to charge with their credit cards, right, you can enforce a convenience charge to either cover the bank charge that they are going to that we're going to be receiving, or you could charge a convenience charge to so that we can earn a couple dollars based off of the transaction that they're using. So most cases that you will ever see interest would be if you finance your payments, right, and you receive it through the internet, right? That's going to be interest that you can collect because they made an agreement that if they have an overdue balance, right, they have to be subject to anywhere from 10%, right, from the example that we saw on Monday, right? We have we made an agreement that we can charge our customers an additional percentage or additional interest based on the overdue amount that is reflected on their statements. So therefore, when we charge this, therefore we can collect what's called interest income. Okay, right? It's money that we earned, not based off of the sale we made, but it's based off of someone owing us money. Okay, so therefore we do have interest expense, or in this case it says interest earned. We earned $8.62. Okay, so therefore, going back to my QuickBooks, we earned $8.62. So therefore, this is going to be considered interest income, right? We earned it. We earned extra money. Interest. Okay, oops. There we go. Interest, either income or expense, right? We're not paying out. We are receiving the money. So in this case, it is an income account, right? It's what we generated, interest income, right? And once again, class is going to be applied to both classes, okay? And then now we can go ahead and click continue, right? Once we click continue, then you're going to get a list of all the checks that you've written, okay, and all the deposits that you've made, right? Now let's take a look at this window before we go ahead and proceed. It tells us down below that this is what we began the bank with $14,384, right? And then this is where I was talking about getting your balance down to zero. So notice this, right? It's already calculated my interest earned, right? It's already subtracted out my my service charge of $10, okay? Ending balance, so now my goal is to get to $5,424 $1.92, okay? And then here it says cleared balance. Therefore, I have $14,383 that I have to clear, okay? And then right here, the difference right here is that I have a difference between my bank statement and my actual checking ledger. My difference is $8,958.20. So therefore, this is where I need to always keep focus, because every single check that I validate that has cleared, it's going to slowly drop this number right here, the difference. Okay? And our goal is to make this difference become 0. All right? So as we can see, here's a list of all the checks that this company has written and all of this stuff that we've deposited. Now there's a few things that you can do that you notice. Look at the dates. The dates start from December all the way to February. Okay? So what I can do is I can filter these things out, because once again, right? I can filter out my transactions based on what actually has occurred. And in this case, obviously, I know for sure that this check here for February, for February 7, of course, it's not going to clear on my January bank statement. I know that for a fact because I wrote this check out on February 7. My bank statement cut off as of January 31st. So in this case, I already know that this check right here isn't going to clear because I wrote it after the statement date. So what you can do is at the very, very top of the window, okay, you can see up here it says hide transactions after the statement date. So if I go ahead and click on this, right, therefore, my February transaction disappeared, okay, because of the fact that it doesn't matter, because at the end of the day, it's something I'm never going to clear, because my February check will never appear on my January statement. So by doing so, we have all these checks, right, as of the end of the statement date, which is January 31st. So now I'm going to go ahead, and this is how you complete the reconciliation. You take your bank statement, okay, and you're going to go through every single detail. So in regards to deposits, right, you're going to go through your deposits. You're going to go through all of your checks that you've written, and you're going to check mark them off in each little section here in your bank reconciliation. That is to validate and to confirm that those transactions have cleared, okay? So let's start with the first one, okay? Our first one is going to be taking a look at our deposits. So here we have a total of 3 deposits that we've made. Okay, let's start with the very first one, $249.54. All right, let's check. Did we actually clear 204? Do we actually have 249? Yes, we do right here. This deposit right here. Okay. We can highlight it in green, right? And it's going to automatically check mark it, right? And notice this. My amount has now increased to $9,207. Okay? All right. But as we keep going, right, we're going to notice that this number is going to start shrinking or increasing. And the difference that we want to get to is 0. Okay? So therefore, that's our very first thing right here. We also deposited a check for $19.50, and we also deposited an $11.77. So let's go ahead and take a look at this. So $19.50, yes, we have cleared that. And then $11.77 is right here. Okay, so I validated that all 3 deposits have cleared. right? Because my bank statement shows it so, and so I need to make sure that on my end that they did clear. Okay. So now we're going to go over the checks that have cleared. So let's take a look here. We have a total of 6 checks that have cleared. Now we're going to go ahead and look at their check number. So that's a huge indicator. Okay, so we have 325, 326, 327 that has cleared. Okay, so check number 325 has cleared, 326 and 327 has cleared. Let's see what else has cleared. Then we have check number 6001, 6003, then 6004. So we're already missing one key thing here is my check number 6002. I have no idea where it went, but that's okay. We can always go ahead and look for it. Okay. So here we validate that check number 6001 has cleared, 6003, and 6004. So here in our books, we never even wrote a check number 6002. Okay? So therefore, on our end and the bank's end, that is holding true. That hole in our checks is something that we never written. Okay? So from there, that's all the checks that I have cleared, right? And therefore, check number 328, right, for the $2,152, that right there has not cleared yet. Because most cases, when you do write a check at the end of the month, right, as of the 31st, like we mentioned before, it can take anywhere from 2 to 5 business days to clear, because the one thing that we're relying is on whoever is receiving it on their end, right? So we give them 2 to 5 days for it to clear, but if not, then we have to assume that they have the 6 months to go ahead and deposit that check into their bank. Now, of course, you can also do this as a vendor or as a customer, right? If you're trying to keep your books very clean and you want to ensure that the vendor has received your check, you either want to call them and say, hey, did you receive my check yet? Because my bank is still outstanding this amount. And if they said, no, I haven't received it, then you have to go reissue a new one, etc., etc. But in this case, we wrote it on the very last day of the month. So our assumption here is that it could take anywhere from 2 to 5 days because we have to send it out, right? Mail it out. And when they receive it and they put it into the bank account is also one of the things that we also have to keep in mind. So in this case, here's the $2,000 I'm missing, right? If my bank says I have $5,424 and in my checking account I have $3,894, I believe, then there you go. I found my discrepancy right there. That this is the $2,000 that's going to be placed back into the account. Okay. So now that I've checked off all of my checks and I cleared out all of my deposits, now I am missing $8,000. I have a difference of $8,000. Okay. So let's go ahead and take a look at my bank statement to just ensure this, because on my end, I see right here I have $8,000, but I don't know what this is. There's no details on what this is. All I know is that there's an $8,000 written out right here. There's no details, no check number, no anything on there. It's just a straight $8,000. Take it. That's right here. It's taken out. So let's go ahead and verify what that is on my bank statement so that I don't have to look up my discrepancy. So what happened here for why is it that I have $8,000 taken out for my bank?
It was a transfer.
transfer or a withdrawal, okay? So we transfer money, okay, for $8,000. Okay, so there we go. We validated that we did actually confirm that there was an $8,000 transfer amount. So I'm going to go ahead and check that off. And what do you know? Now my difference is 0. Therefore, my ending balance is now $5,424.92, exactly matching my bank. And therefore, I can now successfully go ahead and complete my reconciliation. Okay? Any questions? This is probably the easiest thing that you can do, because all you have to do is just have your statement readily available and just check mark whatever happened. No questions?
No questions.
Okay. So then, if you keep reading in the book, there's a section where it says that, well, what happens if your amounts end up not matching at the end? So let's say we did have that $8,000 discrepancy, right? It didn't show anywhere in our statement that we had $8,000. So what you can do is you can click this modify button, and it's going to take you straight back to that very home page right there. And what you can do is you have a few options. You can do the locate discrepancy report. Okay, so if I click on that, then it's going to run reports so that it can find the hole that you're looking for. Okay, so once again, it's not going to it's not going to highlight it, but it's going to definitely run a report so it can show you what you can do in regards to locating that discrepancy. Now, once again, this usually happens either if you start out with a bank account with a bank number that isn't matching your bank statement. So you could locate your discrepancies by running these two reports here. So your you could preview your reports, you could run it. Okay. Your book does a good job detailing into that, especially with that check that you're missing for the 6,002. In your books, you're never gonna locate it, but they do give you an example in there. But for this case, we do have that it does match. Now, what you can do too is if you do run that report, right, if you do run the reconciliation, knowing that you are having a discrepancy for $8,000, you can, and then one day, then when you run your reports, right, and you end up finding where that $8,000 where it was placed, then what you can do is after that, once you've already clicked on that reconcile button, you can always undo the last reconciliation. Okay. Now, if you undo the last reconciliation, a few things are going to happen. You're not going to be filling out your statement charges or your interest income, because from the previous reconciliation, you've already completed it. And when you undo it, you're not undoing the charges or the interest income that you're actually doing. You're just only redoing the reconciliation. So if you were to do the undo, you don't need to enter in any of the bank charges or any of this stuff in there, because it's automatically already calculated into your bank account. Okay, so again, running the reconcile, as rule of thumb, should not happen more than once. So if you have that $8,000 discrepancy, best way to do is to look up where it is, find it, and make sure that you can locate it, because you never want to start the next cycle with an uneven balance, because that's going to then you have to remember, okay, I have $8,000, I need to bring that over into the next accounting period, okay, or the next month, Okay, so you definitely don't want that to be hanging over your head, especially if you're dealing with every other account. So best rule of thumb is if you don't get to zero, look up all the ways until you can find it and then get to zero. Okay, that means someone maybe forgot to update QuickBooks for a specific transaction, etc., etc. So once again here, my discrepancy is 0. So I'm going to go ahead and click on reconcile. Okay. Okay, then you're going to get this little pop-up window here, and it says, okay, now that you completed your reconcile, what would you like to do? Would you like to run a summary report, or would you like to run a detailed report? In most cases, you could do both, and then you're going to go ahead and click display. Now, when you do that, here are your 2 reports, okay, and this is very good for you to print out to keep as records, because once again, this is your bank reconciliation report. It's telling you, well, this is the amount of money that you've cleared. This is the amount of money that you've cleared. And again, it runs your report saying, well, in this case, you shouldn't have $2,897. It is now $5,424.92. Okay, so that's what the report does. It just gives you a summary. So that was the summary. Here's the detailed ones. So this one shows like how you got to that number right here, the $5,424.92. So how you got there, you check mark, right? As you can see, you check mark all the checks that you've written, you check mark all the deposits that you've made, and so on and so forth. Okay. So once again, whoever is in charge of doing this is usually the accountants themselves, right? Or it could be it'd be the accountant themselves, because they're looking at the overall company file. Okay, so definitely something that you definitely for sure need to know. Okay, any questions in regards to bank reconciliation? Okay, the purpose of completing one is to validate that your transaction, that you did your accounting is correct, but also to validate which ones have cleared and which ones have not. So it's also another way to check up all of your transactions, especially the ones that you think have been made but have not cleared yet. All right, any questions? No?
No, no questions.
Okay. So here we go ahead and dive into the next section. Here is, again, if you need to find your errors in your if your bank reconciliation does not come out, or the difference does not come out to 0, these are the necessary steps that you need to take in order to find those discrepancies. So I've mentioned them before, right? You're going to go back and you're going to run your locate discrepancy reports. Okay. And yeah. So what happens when you need to deal with bounced checks? Okay. So as us, right, as the company, you can be one of those people who writes a faulty check, right? And this stuff happens pretty often, especially when you're working at a business, because sometimes when we're working at a business, we oftentimes hold off and select like basically one day for us to just write a whole bunch of checks and just push out all of our bills in one go. So that's the dangers of that. Is what if you wrote 20 checks at one day and you weren't looking at your bank account very often and you decided to just write a faulty check, right? Usually payroll happens. That's when bills are paid as well. payroll, right? You're obligated to pay your employees, right? You can't deny them their payment. But other than that, yeah, you have bills to pay. Okay, and you also need to frequently make your deposits, right? If you receive a check, don't wait till the end of the month to deposit those checks, right? You should generally deposit them within that same week, okay? Because it's very important that the minute that you receive money, that you place it into your checking account so you have enough money to go ahead and confirm that you're making your payments, okay? So, but however, that means you can be subject to writing a faulty check. It happens, okay? And then also, can also look at another standpoint where our customers can also write faulty checks, right? Because they're customers, we can't assume what their situation is, whether it's a financial, emotional, whatever kind of situation that they're in. And if they just can't afford to pay for the items, right, but they still write you a check, or most cases there's like, oh, I swear I had enough money in my bank account that when I wrote my check out that it should have cleared, but they forgot that they had a few online payments that cleared that same day or whatever. So sometimes you can't really trust your customers to do very well accounting, right? Because not everybody knows accounting, especially, yeah. But you also want to make sure that as on your end, if this does happen, if your customer decides to write a faulty check, the bad news about this is that not only does the customer gets fined for writing a NSF check, you also get fined because you sent in a bounce check, meaning because the bank, right, they already charged you for services, but because you're telling the bank to push through this check and they run it through it multiple times and it shows up that it is a bounced check, they're going to charge you because it's for part of their services that check didn't clear, so they're going to charge you for attempting to place in money that isn't really there. So you get faulted, the customer gets faulted, so therefore this is what happens when we receive a faulty check. So here we are. We're going to take an example here. We're going to take a look at our received payments, right? And the last thing that we should have received was Mr. Bob Mason's check. Now, once again, if you have the check information, you can just simply go to your customer center, right? And you can look up the person. So if I look up Mr. Bob Mason, right? And I look up his transactions, okay? And I see that he wrote a check number 2625. I can just go ahead and click on that payment right there. But what they wanted to show you is that what you can do here in QuickBooks is that for every single transaction that you've completed, right? It's in a specific order. Okay, so I'm going to go ahead and click my receive payments, and you're going to see that you have this little arrow that shows you that you can go to your previous or the last thing that you've entered, right? And it should work that way. Now, I've done this a couple times. Sometimes it doesn't work, sometimes it does. And in this case, it does work. Okay, it finally appeared Mr. Bob Mason for his check number 2625. Okay, now for any reasons, right? Let's say Bob wasn't the last person that you've entered in, right? And if he isn't the last person that you enter in, you don't want to spend all your time just going back, hitting that previous button until you find the person that you've are encountering, right? You're better off going to the customer center, finding that specific individual, and then locating their specific transaction. But in this case, the book told you that the last person that you entered was Mr. Bob Mason, okay? Now, this is the only place that you can do it. Okay, so there's only one way to record a bounce check. All right. You need to locate the received payment from the customer, right? Not their check. You need to locate where they made the payment. And then at the very top of the window, you have the record bounce check or bounced check right here. Okay. So when I do that, right, I'm going to record that he wrote a faulty check. So then you're going to get this bounced check window. I'm going to drag it so it's here. Now, in this case, right, we know that the bank's going to charge you money because you attempted to put in a check that has no money in it. Okay, so in this case, how much is the bank going to charge you? I believe they charge you $10, okay, for a bank charge, service charge, okay? And of course, I'm going to associate that with my expense account because it was a fee to me. So here, I validate that this was a bank service charge, okay? Class, once again, Bob Mason belongs to San Jose, so you definitely want to make sure that your income and your expenses match, okay? Now, here's the question that is very, I guess, trivial, right? How much are you going to charge the customer for writing you a faulty check? Right? That could be a very simple question, but that could also be a very harmful question as well. But you have to also change this as well. Change this to January 31st of 2019. Okay. So therefore, how much would you charge your customer for writing you a bad check? Okay. You could charge them $50, but you also want to be kind of generous to them. Now, back then, I don't know about you, but for me, my bank account, right? I bank with Bank of America. Anything that I do wrong in Bank of America, they straight up charge me $35 without even asking anything, okay? If I pull too much money out, boom, $35 charge. If I enter in a faulty check, boom, $35 charge, okay? And they charge based on every day that my bank account is outstanding. So if this case, right, if this bank charges you $35, then you can definitely say, hey, Mr. Bob, you owe me $50 because you wrote me a faulty check. Okay? But again, in this scenario, I think they're just being very nice. They're saying that the bank is going to charge you only $10 for having a bounced check. So in this case, I'm only going to validate that I'm going to charge Mr. Bob Mason just $20, right? $10 to cover the bank service charge, but also $10 is going to go into my pocket because, you know, that's my own money that I had to pay for that charge. And I want to get compensated at least 100%, right? I want to get $10 back for whatever reason, right? And then I'm going to go ahead and click next. Okay. Then it's going to ask you to make sure that you validate that this is the correct. So again, there's two checks that are outstanding, right? The 401 and the 776, I believe, to give you a grand total of the 1177. And of course, we're tacking on 20 extra dollars. So then I'm going to go ahead and click finish. Okay. So then now notice this. Now under customer payments, right, you see that it is tacked on an additional $20. So therefore, Mr. Bob Mason owes me $11.97. Okay, instead of the previous, which was the $11.77. Okay. So let's say Mr. Bob Mason does indeed make us make a payment. So let me go to receive payments. So here we are, that window, right? He does write us a check, but notice this. Right here it tells us it's a bounced check. Okay, it told us right here it's a bounced check. So I'm going to go ahead and exit this window real quick because I have to refresh it and record a new check that Mr. Bob has written us. So Bob Mason. Okay, and let's say he actually wrote the check for the 1197.86. Okay, 1197.86. Okay, and let's see, when did he write this check out for? He wrote this check out. Excuse me. Okay, so he wrote this check out on February 10. Check number 2538. And this time he wrote a new check, right, for the amount that covered both the charge that I've issued him, right, the $20 issue right here. So he did this on February 10. And he did, this was check number 2538, or 3839? 38. Okay, so there you go. And he wrote for the check for the total amount, including my charge that I have right here. So then I'm going to go ahead and click Save and Close. Oh, I click Save and Do. Save and Close. So once I get that beep approval, then if I actually look at Mr. Bob's Mason's account, he now owes us nothing. Okay, because we recorded the bounce check, right? So let's go look at Bob Mason's transactions. So here, you can validate that when you look here, that I have a general journal created, okay, for all transactions, okay? And so what happened here was a general journal had to be made because they had to reverse his amount that he owed us, right? And we had to take it out from our checking because he wrote us a faulty check. So that's exactly what happened here is they used the journal to reverse the transaction, okay, to cancel it. So then now he owes us again the 1179. So that's what happened here. And then of course we charged him additional $20. So now we finally received a payment. Okay? We finally received a new payment that validated that he did make that extra $20 payment. Now, there's a few things that you can do when it comes to this. You can issue a new invoice or a statement if you'd like. Usually you would just do a statement instead of an invoice. You can write them one and say, hey, you know, because you've written me a faulty check, you're subject to be charged a financial charge for the inconvenience. And therefore, you can send a new invoice or you can send a statement that includes this $20 tack right here because, again, he's making payment to more than one invoice. So once again, usually rule of thumb is you would contact your customer and say, hey, your check has bounced, all right? And if the customer says, okay, well, let me put money in there, yada, 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 then you tell them that you're going to be subject to have to pay an additional fee. So once again, that's what happened here. My transaction has finally cleared, and now we have a new check in my deposits, right? Oh, homepage. Homepage. Yes, it did. Okay, well, once again, okay, Okay, so for any reason that your computer does close, you can close out the program, and what's going to happen is that you can resume exactly where you were before. Now, in this case, it's not letting me close it. Okay, so I may have to do my task manager. Task manager. Okay, and I'm going to click on QuickBooks, and I'm going to end the task. Okay, so then now what's going to happen here is something I do want to show you because this is actually pretty cool. If I double click on my QuickBooks, right, it's going to show me the same little entrance there. It's going to ask me, do I want to update my QuickBooks? I say no. And then the first thing that's going to pop up is it's going to ask me to enter in my passcode. And I'm going to go ahead and click in, type in here, Sleater18. And you know what's going to happen? It's going to pop up the exact workbook I was working on earlier. Okay, now I have to also validate to see if all my transactions even went through, because that's the one thing that you need to know is that yes, the last thing I did was enter in that deposit, and here it is. That's what I wanted to show you, that it is right there. It is pending in my deposits section. Okay. All right. So, any questions on writing a faulty check? Okay, well, on their end. Okay. Now, what if we wrote the faulty check? If we wrote the faulty check, then therefore we have to do these necessary things. You need to let your vendor know why you had a faulty check. So for instances, when you do check your bank account frequently, which you should, especially if you're running a business, your goal is that you need to constantly make frequent checks on your checking account to make sure that you have enough money in your account. But also, every time you write a check out, you also need to know you don't really have the check written out, or the check hasn't cleared yet. You want to make sure that you do make sure that every check that you do write actually does clear. Okay, so of course, with the convenience of today's society, right, we can look at our online banking account at the palm of our hands at any given moment. So once again, if you're making a transaction and you're frequently updating QuickBooks for it, it's very good that you update your QuickBooks with your bank account at all times. Okay, so once again, you either call up your vendor to ensure that you let them know that you wrote a bounce check, right? You're gonna go ahead and two things. You can either put in money into the bank account and tell them to clear the check one more time, or you can void the check and write them a new one. Most cases, they're going to charge you an additional fee on top of that because of the inconvenience that you charge them for. So they may, the best way to go is to just void the check that you have currently, put the money into the bank, write them a new check, and because they're going to charge you, write them a new check and send it out. That's usually the best way to go around this. Okay, but here are the 6 options that you can do when it comes to you writing the faulty check. Right? So any questions there? Okay, so now, like we've done before, it is identical to doing this as well. Okay, so this is where we get to take a look at paying our credit card. So I believe we got to take a look at this before, right? Where we entered in our vendors or whatnot, right? Where we were making a credit card payment. Now, the rule of thumb here is that usually when you're dealing with a credit card payment, they do recommend you to just save it and hold and wait till the very end to just go ahead and write the check out at the end. Because the one thing about entering in a bill is that you may or may not pay the full amount. Now, let's say you're just going to be like, okay, every time I enter in a credit card statement, my best rule of thumb to do is to just pay the whole amount every single time. But of course, with certain businesses, right, that money could be paid to somewhere else versus then paying off your credit card. So you may go for the minimum payment. So the best rule of thumb is if you do end up not sure about the exact number that you're going to make a payment to your credit card, we are going to wait and leave it to the very end when you write off a check. It's just a lot more easier than to enter in a bill and having that obligation that you have to pay whatever you marked the bill off. Okay, but that's okay. We've already went over that. I don't remember what chapter, but we have gone through making a payment to the credit card already. So let's go ahead and take a look at doing the reconciliation for a credit card. So once again, another example here is going to be identical to doing our bank reconciliation. The only difference is you're going to be selecting a different account. So once again, you can do it on your home page on the banking section, or you can go up to the menu bar, banking menu bar, and you could go ahead and click on reconcile. Now, the first thing here is the same exact window. The only difference is you need to toggle which account you're reconciling. So in this case, we're going to reconcile our National Bank Visa credit card. So as you can see here, was the last statement balance that you had, which was the 2001 52, right? That is just there because that's what your last statement balance was, okay? Now, of course, you're going to enter in what your new statement balance is as of the end of February. So in this case, we're doing the February credit card reconciliation. So here says right here, statement date is the 28th. The due date is the 31st of March. So we want to make sure that this is for the statement due date, which is going to be this amount. And it says right here, the minimum payment is $12. Okay. So whether you want to pay the minimum or pay the whole amount, right, it's going to determine when you actually if you choose to enter in a bill, you have to make sure that you indicate that this is how much I'm going to pay. All right. But here, let's go ahead and take a look at our credit card statement. So it says here are the transactions that happened, right? We made a payment to my credit card. We paid off the whole thing. And then we charged the card twice. One for $133 and one for $35, okay? And then notice down here is that this is the trade of what the interest that you're going to be charged for. So in this case, I got charged $16.11 for finance charges. So once again, right, especially when you make an agreement with a credit card company, you're agreeing that every month you're going to be charged a certain percentage for overstated amounts in your balance. Okay, so it's going to be based on your account balance. So in this case, I owe a total of $168.70, and therefore, I don't know what the interest percentage is here, but I got charged $16.11 to make my total ending balance to be $184.81. Okay, so once again, let's go ahead and take a look at our credit card reconciliation account here. So here, my ending balance is going to be $184.81. Okay. And we need to make sure that it's the date of February 28th, the end of February. All right. And then now we have to also include what the interest expense was for the $16.11. So once again, that was the interest that I got charged for. So we're going to call this interest expense. Okay. And once again, class is going to be overhead because the business credit card can be applied for both San Jose and my Walnut Creek location. Okay. And then we're going to go ahead and click continue. So once again, it's the same exact thing. You're going to notice this, right? Because the whole purpose of this is to make sure that our difference is ending up to be 0. So right now I have a difference of $1,983.30, right? Like we saw on the bank's on the credit card statement is that we validate that a payment was made, right? For the $21 $2,100 something dollars. Then a charge was made for $133 and a charge was made for $35. So now that I've validated that these 3 transactions have happened to my credit card, and look, my difference between the 2 credit cards are 0, and that I should get $184 remaining in my credit card bank balance. Okay. And then I'm going to go ahead and click on reconcile. Now this time, here's the difference between running the bank reconciliation versus the credit card reconciliation. It's going to give you the option to make the payment to the credit card company now, or you can enter in a bill. Now, like I've mentioned before, there are 2 things that you can do. If you're unsure on making your payment, then don't enter in a bill. Okay? But if you are for sure, let's say the minimum is $12, I'm going to make a $50 payment. Then go ahead and enter in the bill. Okay? But like I've said, most cases, you should definitely, if you're unsure, you definitely want to wait till the very end and then write your check. Because once again, if you've committed that you're going to make a payment for $50, then you better make a payment for $50. You can't change your mind after. Okay? So in this case, I'm going to go ahead and enter in a bill, and I'm going to click OK. So once I do that, it's going to reflect this, okay, and then it's going to give me the report, and I'm going to click close. So once again, here's the bill, and guess what it's outstanding for? It's going to be outstanding for the total amount of $184. So like I mentioned before, right? When you're creating a bill, it's going to give you for the total amount here. All right. And because I said, you know what, I'll make a payment to all of it, then you could save it. Then you could go ahead and enter in the bill saying you're going to make a payment for the full amount of the $184.81. Okay. Reference number here. Okay. Let's see what your book says, because I know your book tells you to enter in the bill. Okay. The book says that it is going to be no reference number, okay? But the date is that it's going to be due in 30 days, which is that it says right here that it is due on March 30th. Okay, so let's validate that. Yep, March 30th is good. No due date. So once again, if you are planning to enter in a bill, your assumption is you either pay all of it or you pay some of it, and you have to claim how much you're going to pay. And once I have that, I'm going to go ahead and click Save and Close. Beep of approval, so my bank, my bill for that, and I have to use my bill payment in order to pay off that bill. Okay. So any questions, because we got to take a look at how to just do the payment in the first place, and then this one is entering in a bill. No? Okay. All right. So we got to take a look at how to look at our credit card transactions, right? So every time we do a bank reconciliation, right? The bank reconciliation, all we have to, at the very end is to run a report. The difference between that one and a credit card reconciliation was that we get that notification where we either enter in a bill or pay off that credit card. So that's the difference there. Now, of course, every single account's going to be different. Most liabilities accounts are most likely going to pop up that are you going to make a payment or are you going to enter in a bill, etc., etc. Okay. Now, here is going to be bank feeds. Now, of course, the great thing about how universal and how easy accessibility QuickBooks has with everything around you, right? So what this is only important to you is if you use online banking, okay? Bank feeds allows you to connect to the internet, to your actual bank account, and allow you to facilitate your banking records using QuickBooks. Now, as dangerous as that sounds, right? If you're not very careful, that's probably one of the most unwisest things that you can do because, the more you place more sensitive data into QuickBooks, the more likely that, you can run into the risk of hacking. Now, of course, if this works best for you, right, then it definitely is going to be recommended in case you're the kind of person that doesn't frequently check your bank account. Now, especially if you're just the accountant, you shouldn't have access to the bank account at all. All right, the owner should only have access to the bank account. So therefore, the bank feeds could be useful for those who aren't the owner themselves and they need to make a look at the bank statement or they need to gather information that's connected to the bank itself. So yes, this would be good for anyone who isn't the bank or who isn't the owner of the business. Okay, so once again, this bank feeds is only pertinent to you if you choose to do online banking because what you do if you click on this, right? So it's actually on your home. It's not on your home page, excuse me. It's actually on your icon bar. If you scroll all the way down, you should see bank feeds in here. Okay, I think I might have went over a couple bank feeds. I passed it. Okay, here. Bank feeds, right? You click on it, it's gonna automatically populate. Okay, and you have not set up. You have not set up any accounts for online. Okay, services. Okay, would you like to set it up? I'm gonna say no. So once again, if you click on it, what it does is it takes you onto a website for you to log into your bank account, whatever banking that you do. Okay, and it allows you to get notifications in case something happens, such as, anything that happens to your bank account, QuickBooks will notify you. So that's the cool thing about this is that you can frequently check your online banking at any given time when you connect your bank feeds to QuickBooks. Okay. And that's just pretty much it. I mean, if you want to go through and set it up yourself, once again, as this company, we are a fictitious company, right? Academy Photography does not exist, okay? And we used a fake bank account number, so therefore, I can't show you how to do the rest of this. But that's what usually would happen. You'll set up your online banking, right? So that's what you can follow through if you just do decide to, use QuickBooks and use online banking and make it easier for you to access your bank account using QuickBooks. Okay. So that is the conclusion of chapter 5. Any questions in regards to chapter 5? Because if not, we can go over the review questions.
No questions.
Oh, All right, so let's go ahead and go over the questions. All right, so number 1. Okay, when the beginning balance field on your begin reconciliation window does not match, okay, the beginning balance on your bank statement, you should C. Click on locate the discrepancy in the begin reconciliation window. Yes. So when you do that, you're going to be running the reports, right, to scan the whole QuickBooks to find any discrepancy. So if there's a missing check number, it will locate that. Okay. So once again, C is correct. Question number 2 says, which statement is false?
D.
Did you say B or D?
D like David.
D like David. Okay. You can enter bank service charges using the write-a checks before you start your reconciliation. That is actually true. Okay. If you I believe it's on page where it says before you begin your reconciliation, it says that yes, you can enter in your bank service charges prior than completing your reconciliation. But I think I mentioned this too. You don't have to necessarily do that, because if you're doing a manual reconciliation, you don't have to do that. It does it for you by just going to the reconciliation window, right? You could enter in all your statement charges automatically instead of having to do it manually. So D is actually correct. D is actually a true, I'm not, sorry, not the correct answer to the number 2, but D is actually a true statement. Okay, so it's not D. C, you can enter in a bank service charge using the register transaction. Yes, you can, because if you can enter it using the write a checks window, you can also do that using the register. So C is actually true.
So is B?
B, you can enter a...
I said B, but somebody says C and beat me to it, so.
Oh,
I'm saying it
okay.
again.
No worries. Okay, so you can enter in a bank service charge on the begin reconciliation. Now, that is what I showed you to do. The question here is, which one is not true? So which one's false? Which one isn't the correct answer? Which one isn't right? So in this case,
Well, it would have to be A because we eliminate all the other ones.
correct. Now, of course, when we dove into this, this question, right? That's what you're going to notice a lot on your QuickBooks actual certification exam, is that they're going to ask you negated questions or negative questions. So in this case, it's not asking you what's true, it's asking you what is false. Okay, so again, these two are things that are written in the book, and I've mentioned it before. If you're doing a manual bank reconciliation, then yes, enter in the bank service charge prior using the write a checks window, or you can use the register. So in this case, this is also applied knowledge as well. Okay. Whereas B says that you can enter in the service charges in the begin reconciliation window. That's exactly what I showed you, right? If I click on the reconciliation, here's the begin reconciliation. That is exactly where you entered in if you do not use it the manual way. So this one is true. So therefore, the only answer left is A. All right, and A says that you can enter the bank service charges using the enter statement charges. Now, if you guys remember what happened in chapter 3, what is the enter statement charges? What is the enter statement charges? What does this enter in?
Under statements?
And what are statements for?
Yeah, because on the statement, it'll be the charge that they charge you for either interest or, like you say, bounce checks or
To who?
uh, to us, to whoever is the owner of the company.
No.
No,
So take a look. What section are we belonging in here? What section is this?
it's the customer. Oh,
Customers. These are charges that we give to the customers. Okay, so remember, I didn't talk about anything about this today. This was yesterday. This is when we want to charge our customers for something, we enter in those charges through the statement. Okay, so when we make these charges, it's to the customer. So in this case, does making the charges to the customer have to do with us at all? No,
Not for bank fees, no.
not for bank fees, because bank fees affect us. Okay, so A would be the correct answer here. This statement is not true because the enter statements charges is for customers. Okay. All right. Question number 3. Okay. When you find an erroneous amount on a transaction while reconciling, okay, correct this amount by D, performing the enter B or C, which says here you either double click on the entry and then changing the amounts on the transaction, or C, selecting the entry, selecting the entry in the reconcile window and then clicking on the go to and find, or changing the amounts on the transaction. So yes, this part is where you had to read finding the errors in your reconciliation. Once again, that only happens if your balances do not match. So once again, that's something that you had to read to find out that the answer is indeed D. It is B or C. Okay. Number 4, okay? To properly record a voided check from a closed out account. Okay? So how do you properly void it out?
Would that be C?
You said C?
it's B, isn't it?
Yes.
You're supposed to void it.
Okay, so the answer is C. Now let's take a look at B, okay? You're going to make a deposit in the current period, okay? And then code it in the same account as the original check that you want to void, and then delete both transactions in. Okay, so remember, our rule of thumb here in QuickBooks is that you never delete anything in QuickBooks. So already B is already a wrong answer right there, because yes, you void it, but then again it says right here, then you delete the transactions in the reconciliation window. No, because then you're going to build even more holes in your bank reconciliation. Okay? Whereas C says that you're going to find the check in the register, select it, and then edit the menu and then void it. So in this case, that's the correct one. You're going to just locate the check and void it, whether the accounting period has been closed or not. You do the same process. You just void it that way. So C is the correct answer. Okay? Never ever delete any transaction, especially when it comes to voiding a check. You definitely don't want to have any holes in your checkbook, right? You don't want to have a missing number. Okay. All right, last but not least, question number 5. Which of the following columns cannot be displayed in the checks and payments section on the bank reconciliation window? So this is when we see the reconciliation window. What do you normally see? What do you see? And in this case, the question here is asking, what do you not see?
B, class.
B, class is correct. You will not see the classes. So this is what they're talking about, right? So if I were to go ahead and go into my reconciliation and I go into continue, okay, I'll just write, I don't know, a random number. And I click continue. This is the column that they're talking about. You do get to see the date. You do get to see the check number. And you do get to see who you wrote the check out to. Nowhere on here do you see the class. Okay? So there you go. Check number, date, and the payee. So again, class is not one of those things that you see. So, yes. Okay? Any questions in regards to chapter 5?
No questions.